be some sort of a recovery also. Maybe slower, maybe longer, but at some point of time, you expect that to happen. So depending on how far you are from your goal, then only take, an immediate reaction or a tactical call, such as making a switch or a redemption. So by and large, if you have selected a fund, some of the names I mentioned earlier, which are going to be in quartile 1 or 2 over a period of time, then I think that you should just stick with the, asset allocation and just go for it, unless it's not been performing, for many quarters, and then you decide to make a change.
Okay, and Nisreen, just one thing more. I want to know some of the best performing child focus funds. You did mention a few of the names before. Anyone that you would specifically highlight again?
So basically, SBI currently has a larger asset allocation towards debt. So, if you notice between the four names that I mentioned ICICI Children's Gift Plan, HDFC, SBI, and Aditya Birla. So, and also UTI has Children's Gift Fund.
Okay.
So, it's not just the performance that you would be looking at, you'll also be looking at your own risk tolerance.
Right.
So, for example, SBI is nearly 60% into debt at this point. So, if you are a safer investor, you're not looking at too much of volatility, then that would be a very good choice for you. But if you feel that you can stomach a little bit of volatility, then all the others have about 60% in equities and about 35% in stocks and bonds. So you could go for any of the others. You will get alpha. Obviously, the more that you are into equity over a period of time of say 10 to 15 years, then the equities will tend to perform better.
Right.
Alongside, you will also have some amount of volatility. So you need to know, what your own behavior will be as an investor, and invest accordingly in any of these.
Okay, and Nisreen, one last word. I want to know, is this actually only for parents, or is it like chachis, buas, masis can also make these investments for, the nephew and nieces? Is that a possibility right now? Is that something that is available?
So, they cannot invest directly. At a certain period of time, yes, they could. Grandparents could open folios for grandchildren. But, SEBI has made some changes in the recent past. So you have to go through the child account and have the guardian's signature. But you could very well make a gift to the parent, and then you have to channel it through the child's name will have to be recorded, and so will the parent or guardians. So the accounts will have to be theirs, the family itself. But of course, as I mentioned earlier, everybody can invest for the child, and you can specifically make donation or a gift on happy occasions and birthdays, and specify to the parent that this is my contribution towards the child's higher education. And I think that's the best way to go about it.
Absolutely, Nisreen, thank you so much, for giving us your views and where an investor or a parent could look to invest for the child's future in mutual funds. What is looking interesting? So thank you so much for that, Nisreen. It's a pleasure having you on the show.
Thank you, Vinny. Thank you for having me on the show.
Okay, with that, we are absolutely out of time on this edition of Mutual Fund Corner on CNBC-TV18. Thank you so much for tuning in. Up next, you have Closing Bell to take you through the last hour of trade.
Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Today, Hang Seng is the big underperformer as well.
Everybody would know the government's inefficient, not very competent, and it needs a lot of work.
Wanting to run your own ship, captain of your own ship.
The market broke the support of 22,600 yesterday. 22,620 was the level that we put out. So 22,530 is on the Nifty. It's a little bit of green, good to see.
My sense is we are getting close to the bottom. I think it's a good time to invest, much better than what it was maybe 6 months ago.
And I think you'll see a return of FII, certainly in the second half of the year, once those valuations get back to those long-term averages.
I think this is the beginning of a trend, and Hyundai is not the only one. I think there have been a number of issuances already of similarly structured companies.
The mid-cap index has dipped into the red. The Nifty and the Sensex have completely flattened out.
Reliance will build 2 world-class hubs of compressed biogas and CBG over wastelands in Assam.
असम की इकोनॉमी की वैल्यू डबल हो गई है। ये डबल इंजन की सरकार का डबल इफेक्ट है।
Frontline indices marginally in the green, consolidating with a positive bias, whereas the mid-cap index is consolidating with a negative bias.
Well, that has been the day so far, and I have to say that it's been quite settled. Nothing wild and nothing large, up or down. It's been flattish. Biding time, I guess, to go into 3:30, and then, of course, midweek, one of those rare midweek market holidays. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios, and it's an all-boys team today. I am Prashant. With me, my colleagues Nigel and Mangalam. Guys, hi. Afternoon.
Hi, afternoon. I think, Prashant, the street will be okay with not getting anything wild. It's been really wild.
Don't want anything wild.
But yeah.
And it all boils down to the thing that you always say, right? When the market does nothing, we call Mangalam, maybe something entertaining happens.
So all the entertainment is on you, Mangalam, huh?
I hope.
Just toss to you when we, it's getting a little slow.
I don't know whether Mangalam's hinting that tomorrow is a holiday. He has something wild to plan down. But let's get straight to the market action.
All right, well, let's just quickly then wrap up things, right? By the way, it's a big move on the currency, and I saw it while I was coming down for the into the studios. It's a 0.5% move, 87.13, and it's the biggest single-day fall in 3 weeks, is it? So that's very, very large, and I'm not sure if there's anything sort of meaningful which has happened in terms of India macros. Is there a big move on the dollar which is leading to this? Right now, we'll have to just quickly check that. Nothing. I mean, the dollar index is flattish, so nothing on the dollar coming through from the dollar, but very sharply lower the rupee against the dollar at this point in time. So just a quick couple of sort of lines on the market then. So absolutely flat, nothing really. Tomorrow, of course, is a market holiday. And I think that perhaps is one of the factors playing out. 22,600 is the sort of first level. We are trading under it on the Nifty, even though the market's up a little bit. The next level on the way down is about 22,396, 22,400 broadly. Nifty RSI is under 30. It's about daily RSI is about 28 point something. So actually, ideally, in a normal kind of a market, there shouldn't be any more fall. I mean, or if there are falls, it should be fairly limited. Nifty bank support stands at about 47,844. And of course, I mean, upside levels are recent highs, not going there. Decline slightly outnumber advances at this point in time. And of course, tomorrow is NVIDIA. And lots of chatter. Alibaba was down 10%. Microsoft is reportedly cancelling some AI data center investments. And of course, NVIDIA is the big one, which has been such a big driver for US markets. So US markets, some fears there, whether even though we've kind of corrected quite a bit, US is just about starting its own pullback. So we'll find out. And I think NVIDIA in that sense will be in the center of it when we come back on Thursday morning. Guys.
Well, that's right. Well, let's get straight then to the technical call. And how do you position yourself in the final hour of trade? We have Mitesh Thakkar, who's back with us on the show. Hi, Mitesh. Nothing sort of day, which isn't too bad. Some kind of consolidation with no downward bias, at least on the headline index. But broader markets, there are plenty of stocks actually that are looking a little bit jittery. What do you think, Mitesh? Just a session to go before we wind down this another monthly expiry. Do you think we'll be in a bit of a band, or do you expect a break up, breakdown? How would you trade it basically?
We already had a breakdown, on Friday. On Friday when we actually started closing below this 22,800 zone. And then Monday saw a gap down. Today is more of a sideways day, but as you rightly pointed out, nothing sort of a day. So it's hardly, moved much, and it's been a very contracting kind of a range. Having said that, I think since there's no sign of reversal, we can still assume that, till there's some pivot on the upside which is being captured, which is, let's say, the first one is around 22,680 to about 22,720. Till that is being taken out, I don't think, there should be any hope for a bounce back. Only beyond that will we start looking at that. So people who are short, people who have some spreads on the negative side can trail their stop to about 22,720. People who want to use any kind of bounce back to sell should try and sell closer to about 22,660, 670 with a stop about 22,720. And if that is being taken out, then I think, we see if there's more strength to get past 22,800, which can lead to a proper and a decent reversal. So till then, I think that's the way market is. It's making lower lows. But yes, what I can say is that the only good thing is that the speed of the fall has, decreased. Compare this to the fall which happened once the market peaked around 23,775 in the first week of Feb. And the first leg of fall was very fast compared to what we are seeing right now. That's the only good thing, but that still doesn't change the direction. So we must keep believing that the market could still make lower lows till we get, as I said, till we get some kind of a reversal sign by the price itself. Having said that, I have two.
So on the upside, Mitesh, on the upside, the level you're looking at is 22,820, right? To start getting a little bit more confident for a breakout on the upside. The first level of resistance is?
Yeah. The first level of the resistance is 22,680 to about 22,720 and then 22,800.
Okay, all right. Let's get to your calls then.
On the stock side, I have a buy on Sun TV. I think that's a stock which is seeing very good reversal from oversold levels. So Sun TV is a buy. Keep a stop below levels of 591. Look for 630, 635 as the possible target range, and persistent. And IT has been very clearly a segment which has underperformed. So persistent is on the sell side. Keep a stop at 55.60 and look for target of around 53.20.
All right, those are a couple of stocks. Speaking about stocks, I'm just looking at a couple of stocks which are making wild moves, to borrow a phrase from Prashant itself, and that's Canfin Homes, which is down about 5%. We're looking at Bata as well, which was outperforming over the last few trading sessions today as well. From the highs, it's seen a bit of a sell-off, but currently holding fairly in the green right now. We have Atul, Abbott India. What's common between all these stocks is the fact that they are part of the 16 which will be excluded from F&O from the March series itself. So you have Abbott, we have Atul, we have Bata India, we have Canfin Homes. That list comes up for you on the screen. Feb series expiry is on 27th Feb, which is Thursday. Between Thursday and now we have tomorrow, which is a holiday. So for all practical purposes, today is T-1 for expiry. What happens to these stocks? From March series, they trade only in cash. So up until then, the kind of open interest that there was in all these futures and options positions, they may have to be unwound. The long calls may have to be converted into equity, or the short calls may have to be converted by covering. So we may expect a few wild moves on the list that we have for you up on the screen. Coromandel International, there's City Union Bank, GNFC, Ipca Labs, Dr. Lal's, Metropolis. There's also PVR Inox, Sun TV and United Breweries. I'm most interested in United Breweries given the sort of interest that people have seen in United Breweries and the kind of volume growth that the company itself has guided for, along with margin expansion. So what happens to that one is something that we'll see. Sun TV up around 4%, PVR Inox about 1.5%. So 16 stocks, all of them in focus ahead of being excluded from F&O in the next few days.
All right, Mangala, I just got a message from Sonal. She's talking about getting some jewelry. Is that the reason why Thangamile is moving up, or is there something more?
I think there's a lot more than that.
Yeah, because she's on the west and Thangamile is open.
Yeah, Sonal is up in Rajasthan right now. Thangamile has just opened a store in Chennai. And if she wants me to go all the way to Chennai to buy her jewelry, then I don't mind going to Chennai. That'll be, me traveling. But having said all of that, Thangamile jewelry up 20% in today's trading session. And there are a couple of reasons for that. Why that has happened is because Not only has the company announced that they've opened a flagship store in Chennai, they opened that on Feb 23rd in T Nagar. T Nagar is one of the key areas in Chennai. But more importantly, on the opening day itself, they got 70 to 50 footfalls and 16 crore worth sales on that day. Now, two things are important out here. One, on the opening day, you expect more people to join, so that explains the footfalls and that explains the sales. But the counterbalancing fact on that day was the India-Pakistan match as well. Oh. So on a day India-Pakistan are playing the ODI, you have about 70 to 100 people visiting that store, and they bought jewelry worth 16 crore on the opening day itself. Whether this sustains or not is important to watch out for. And that's not the only big day that they had in this quarter. Basant Panchami, also in the start of Feb, saw sales growth of 54% over the same time last year. 102 crores is what they did. Currently, the company has limited presence in Chennai. It's only via a few small stores, etc. So them opening a franchise, a flagship store is a big statement, because up until now they've been, in the southern and western districts of Tamil Nadu, something similar to what Hatson Agro did, when they started out outside of the metros and then moved into the metro. They will open 3 more stores in the third quarter. They have about 500 crores in terms of money coming in from rights issue to fund this expansion further. The company, post its third quarter results, told us that EBITDA margins actually ex-customs duty was 6.1%, not a lot lower than what the company reported. And they will end FY24 with more than 24% growth itself. And as a policy, they've increased the gold, which is unhedged for them. So that also takes them away from the risk of any adverse movement in gold prices. So in FY22, hedged gold as a percentage of total was 72%. 9 months, it is 91%. So by and large, the company has been talking of growth via expanding its portfolio, going into big markets, and the entry has been welcomed. On a day India was playing Pakistan in the Champions Trophy, you had 70 to 150 people go to the store.
All right, thanks a lot for that, Mangalam. Well, let's get in Prakash Diwan's view. Prakash, good afternoon, good to see you in. Any view on this name? I recall a couple of years ago, there was not much interest in this name. But just take a look at it. Today, in a market that's wobbly, the stock is up 20%. Tell us more.
Yeah, Nigel, I think this space itself is kind of seeing a lot of names sparkle, names that were always kind of ignored. And, the entire sector was led in terms of limelight and attention by some newer names like Sky Gold and all of that. But, these traditional jewelry chains, they have their very loyal clientele. There is a very clear resonance with whatever they do in terms of launches, new stores, and this is a flagship store, as Mangalam explained. It's bound to kind of draw customers, and gold buying is probably at its peak, because every time, it's like stocks, every time the index makes a new high, there are more people interested in the equity markets. The same thing is with gold. When gold touches new highs, people want to make sure that they don't miss out on it. And I've seen this happen to a lot of other stores, other chains as well. Look at TBZ, for example. That's one of my best. That's a name that I really like. The recent results gave you a very clear indication how strong numbers have been. Deleveraging is held. The balance sheet is getting stronger. And the store presence is far better than a lot of other names that we generally talk about more often. So I think this is a promising space. I haven't dived deep into Thangamil particularly, but from this space, whatever I'd seen about a few months back, TBZ continues to be a favorite, and I think it will hold in good stead even going forward.
All right, TBZ is something that you like. We were seeing some moves on that stock, also one of the bigger movers in this year, TBZ. Prakash, I just wanted your thoughts on a couple of other names as well. Varun Beverages is seeing a big cut in ahead of summer months. That's unusual, right? The stock was up and about, but this year it's seen a correction of about 25%. Street is worried about the competition from Campa, but at the same time, are they also worried about the underlying health issues with regards to carbonated soft drinks?
Yes. No, absolutely. I think this is a direct impact, first-order impact of consciousness in terms of what you consume. And if you look at the kind of shelf space that the non-carbonated beverages have started occupying, I see Paperboat, for instance, getting themselves into so many segments, so many channels, so many SKUs. You have Dabur that continues to kind of work very hard to retain market share. And then, there is this whole awareness that not just the sugar content, but how synthetically these are manufactured. That's kind of the awareness, thanks to social media, is getting much more wider. And the other thing that's impacting Varun Beverages is that Campa is substituting the Pepsi and Coke wherever, given the distribution strength using Jio's omni-channels. It's remarkable the way they've kind of invaded and pervaded all kind of shelves even there. So they're facing competition in the core area and of course from the alternatives as well. So tough time for Varun Beverages. But I think what happens is this is cyclical in that sense. They'll probably find a niche in some other markets and continue to grow, albeit differently and at a different rate. But right now the market's very clearly not liking the fact that it doesn't have something that's working to its advantage at all.
Mangalam, when you were talking about United Breweries, was it the beer
United
company,
Breweries,
right?
yes.
I mean, the same thing what you guys were talking about now with regards to Varun Beverages, consuming health consciousness. Wouldn't that apply on the other side?
See, the total addressable market for people drinking Pepsi is a lot more than that drinking beer. Having said all of that,
no, on a serious note, I've seen surveys, I mean, maybe not here, but globally,
yes.
the cohort of 18 to whatever, in surveys, people say, well, they don't want to. Actually, maybe consumption has come off a little bit, especially in big markets.
It's a very important point that you've made. I was looking at some data from the US as well. A large part of the overall alcohol growth in US has reduced. But we're talking about two different markets as well. One is a developed market where you have a lot of penetration of the product itself. The penetration itself is not there. And then you have also, a lot of freedom for a lot of brands to come in and a lot of other alternatives to just getting high on alcohol, which is legal. Forms of, consuming those products are legal in markets like the US. There is consciousness of health. In that itself, these companies themselves have been, talking about drinking better, not drinking more. So that works in with the premiumization piece. But comparing with what's taking place in some of the international arenas, we'll have to look at all the other variables as well. Penetration is one, the freedom of that product in the market is one, and freedom of alternatives is the other. So those are three factors.
Although, I wonder, with the well-heeled already consume these products, those who want to. So if you want to expand the market, then you've got to go to the not so well-heeled. And then pricing points, etc., come into play. So,
or you,
I don't know.
Come up with innovative products to make the well-heeled consume better once again. The price that you pay for a certain bottle should be 50% more than, for the premium product that you like. Nigel's sitting quietly.
He's got a stoic face. He's thinking, what is this guy talking about?
I'm just trying to, pull out the data when you're talking about penetration, because there was a number that I had with regard to the kind of penetration out there. So I was just trying to pull that out, but I don't think
so the one data point that I can tell you for sure is that there are only 80,000 outlets in the country which are allowed to sell alcohol. Compare that to the universe of the FMCG pack, where there are almost 1 million stores in which regular products are available. This is not to say that, these products should be available in every store, but the industry has been asking for the government to at least allow a few more stores to be opened for
there is
them
a bit of a
to
bump maybe left
increase.
through distribution itself. I mean, availability, easy availability in that sense.
And just one more point, I don't have numbers and all to verify this, but I believe there's a lot of consumption of tequila as well, because I believe the calories that are put up out there are relatively less. I'm not part of that. But I would think of it if calories
Don
are less.
Julio is the brand that Diageo had launched for tequila.
For a teetotaler, Mangalam, you're doing very, very well.
I guess tomorrow's a dry day. So, just a reminder. Prakash, thank you very much for joining us. Good speaking with you. And we went on for
is he in Goa right now, Prakash?
Yeah, I'm very much in Goa with a bad Wi-Fi connection, so that's why I had to get on the phone. But just want to leave you with one thought with Prashant, very relevant point that he made. The premiumization in the beverages, alco-bev segment is moving towards wine, Prashant. So look at Sula. Probably it's come to the right levels from where it used to be, and you'll probably see a lot of salience there. And Nigel is right next to you to throw more light on that. So good luck.
Nigel just spoke about his choice, which is tequila and not wine, but it's a very interesting space to be in.
Well, Sula is another interesting name. Lots of bets on it, but so far, I mean, it's kind of sort of not in that sense played out. We had the management with us a couple of weeks ago.
The per capita consumption of beer in India is 2 liters per annum, and in fact, global average is 30 liters. Thank God.
Let's take a quick break here. We've gone on a goodish bit about this.
My per capita consumption is green tea.
Bharti is with us. Drone Capital, that's coming up on the other side. Stay tuned.
joining me today is a guest who's decided to make a move from Mumbai to Kerala to head Federal Bank.
I think wanting to run your own ship, captain of your own ship.
Captain of your own ship made the choice easier.
That was the easier. That is what made it easy. There is best three and next three, and we should lie somewhere in the middle of that pack. The parameters by themselves may change a bit here and there, but the idea is to lie in the middle of that pack, and that's the ambition. We have a non-resident base. It's a moat that the bank has built over several years, and it's probably one of the biggest brands for non-residents in India. These are customers who are very loyal to us. Sometimes second, third generation of those customers are banking with us. If we make an offer to them on the wealth side, I'm sure we have the trust, their trust that they will buy those products from us. We will pace ourselves in a manner that we keep control of our parameters and do not run away with too much investments in the beginning in the hope of getting revenues. We will balance ourselves.
Break into the top 5, which is the aspiration. Doable in the next 4 years?
The place where the bank is currently and where I want to take it, I think it is very well doable.
Okay, welcome back. Pathik Gandotra is with us, partner at Drone Capital Advisors. Pathik, good to have you with us here on the program. Thank you for joining us. You know, before we took that break earlier, we were talking about spirits and wine and all the other stuff. You were a big, so I thought so. But you were an investor. You bet early on Sula, and you kind of sort of stayed with it for some time. But I think you're out of it now. So tell us what went wrong, because I think Prakash Diwan earlier was with us and he was saying, well, look at Sula, it's come down to interesting levels now. Just your thoughts.
No, it's just that the growth trajectory of the company that we had imagined, they did not meet those expectations, because the wine story in India is actually for real. I mean, there is a strong outlook towards premiumization in alcohol, and it'll be largely towards wines as well. And so we thought that it's the biggest brand in India in wines, and with a distribution and with actually a lot of back end covered in terms of acreage to grow grapes, and a good process and good tasting wines, and the next generation also not taking to wine in a serious way. So it looked like a very kind of a secular growth story. But I guess during sometimes execution fails, or something along the way failed, and we didn't get the numbers that we expected. I'm not negative on the stock. At an appropriate time, we'll take a relook at it again.
But have you been tracking sort of conference calls? Have you been following what the management has been saying?
Yeah, they are. I heard him on your show.
I remember, and I'm just paraphrasing, not exactly what they told us when they were on last. They kind of said premiumization is still very much on as a trend, but they're now also going to focus on some of the other wines, and they're also now focusing on distribution in a big way. Go on, Pathik.
Correct. So let them do that, and then we'll see. I mean, it's not about, there's a statement of intent and there's a statement of execution. We are a bit circumspect about their execution. So let the thing actually happen. Maybe we'll buy it a bit more expensive from here, but only once we see visible evidence of the fact that they are doing actually what they are saying.
And just to add on to what he said FY26 will be better than FY25. So we'll have to track that.
Better than 25. Got that. Pathik, the other one, right, which is maybe will once again come back into focus in some way with, you must have read these reports around FTA talks restarting, is textiles. I mean, right there, center story. And Gokuldas has been something that you bet on for a long time. Again, how are you viewing the opportunity stocks? Of course, everything is sold off, and so is Gokuldas and other textile names. But road from here, according to you?
Let me speak about the sector in general rather than a specific company. All I'm saying is that, you have an opportunity of decades standing before you. There are 3 FTAs with the countries negotiating. One with a mini trade deal with the US, an FTA with UK, and possibly some years down the line, an FTA with the EU also. And the government's focus is clearly on promoting exports and clearly on promoting labor-intensive exports and also on employment for women. So in all these themes, all the apparel makers fit beautifully. So I think this is a time, and to top that, even cyclically, the demand has recovered in the US, and order books are full. When we talk to, I track the sector very extensively. Most of these apparel makers say that their order books for next 6 to 9 months are full. They don't have capacity. Clients are coming to them, asking them for giving them orders, but they just don't have capacity. Many have even exhausted whatever they can franchise out. So it's all completely, I mean, you can't have a better environment for a stock. Stocks have corrected, that's fine.
So Amit, all of this, are there any stocks which you are eyeing in the space itself where some companies, etc., are putting up capex? Is there anything on your radar?
It's not a very capital intensive industry, apparel. You put in, I mean, it's not too much of capex, but there's, for example, a company like Pearl Global, Gokuldas itself. I don't know about the others, but these 2 companies, at least I know, have expanded capacity and are doing it. Pearl Global does it a bit more in Bangladesh, but also India. So I think as a true pure Indian player, I think Gokuldas is the one which stands out. But the point I'm making is that the sector itself is going to go through a transformation. I mean, I'll just put something into context, which I've been saying all along this while. If you look at the time when Bangladesh signed their FTA with the EU, the exports from the country grew from $1 billion to $33 billion in 12 years. The whole country's exports grew 33 times in 12 years. And that actually raised the per capita income of Bangladesh to levels which are comparable to India now. So, I mean, women employment, everything was there. And so the whole ecosystem was built. India is very strong in cotton. We know there's raw material sources is very strong. And so, and plus, the US is now less amenable to importing textiles from China, at least the cotton ones. And so there, if you look at everything, it's just falling in beautifully for the sector. So I guess stocks should move up. I mean, the correction notwithstanding, I mean, everything is corrected. But from here on, I think you're sitting on a huge opportunity.
Right. You know, the argument on the other side is also valid. When the Trans-Pacific Pact was actually broken, people thought that there would be a lot of opportunity coming to India. Unfortunately, that went to countries like Vietnam and Bangladesh itself. So let's see how this really plays out from here on. But are you focusing on it only from an export opportunity, or are there some domestic plays that you like out here as well?
Yeah, so see, what's happening is that the market is corrected fairly significantly. You're down to sub 20 multiples 1 year forward. Earning expectations were modest, and the market has performed on those lines. Even from here on, earning expectations are not very, very strong. So I think it'll not be very difficult for the market to meet those earnings expectations. Capex growth, the government capex is on revival path. You've cut taxes, which will spur consumption. So all these are themes which will, I think, play out over the next next year or so. So basically, consumption as a theme, consumer finance as a theme, all these hotels, for example, all these are themes which will play out. The government capex based themes, a lot of the stocks have become very, very expensive. So it might take a bit more time for the stocks to correct and find the levels before the fresh rally begins. But I'm pretty strong on all these themes, and so yeah.
Consumer, consumer finance. What kind of names?
Take Bajaj Finance, for example. I mean, that's good. And I'm saying the consumer finance business as even for a bank, consumer finance business we should do well. Microfinance, for example, it's not strictly consumer finance in that sense, but microfinance has also been through its cycle. I think it's nearing towards the end of its cycle. So in a few quarters from here, that might also become pretty interesting to look at. As they say, sometimes being early is as good as being wrong. Is it very early in sectors like microfinance, or you think now's the time to start looking at it seriously, maybe nibbling in? No, it's still very early. I would still wait for at least the earnings fall or the provisions to peak and start falling. I mean, you might buy it a bit more expensive. We never try and catch the bottom anyway. So once we see evidence of all this thesis playing out, then is what we do. And to the other gentleman's point sometime back on the treaties he'd mentioned. So as a part of the whole country may not benefit because of the FTA. I mean, I don't know if we change our ecosystem completely, if companies reform, but at least the few large players like Shahi Export, for example, Ardwind, Raymond's, PG, Pearl Global, Gokuldas, all these companies can benefit. They are large corporations. They're not the way the sector has changed in the way the businesses were organized. From privately owned, family-run businesses, a lot of cash transactions in these businesses, to now pretty more organized and corporate businesses.
Okay, and in terms of consumption, which you briefly mentioned, Pathik, what broad areas to look for opportunities in?
I think discretionary consumption is good. I mean, kitchen appliances, home appliances can be a sector which one can look at. Stocks are very, very well beaten down. I mean, it also times in beautifully with the real estate cycle, where there's been a spurt in real estate demand. Homes are getting built, and now it's time to furnish them. So I think that part of appliances should do well, and so I think I would see a meaningful upsurge in demand here. Going to the next Diwali and all, I think you should see a meaningful upsurge.
What kind of, what kind of names, Pathik?
Names, it's a usual thing. I mean, I don't want to take names. I mean, you can take any consumer durable company. Bajaj Electricals, there is Stuffcraft, there is Havells, Polycab into home appliances, and all these companies. I mean, you can find your players. I mean, there are. Then we are very stock focused, so I don't look at every player in that sense. Yeah.
All right, we'll leave it there. Thank you very much for joining us, and good interesting chat, and a bunch of things really coming through. Well, we'll take a quick commercial break here. Some good news for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or you can just scan the QR code on your screen right now, which Mangalam is trying to do.
Welcome back. The markets briefly moved into the red. Now we're up close to around 10 points yet again. A few stocks that are moving around, notable movers, I think. On the downside, Dr. Reddy's actually has slipped. Just pull up the intraday chart of Dr. Reddy's. That slipped, and Hindalco was the outperformer last week. I think it was up 7 to around 8%. This week it started on the back foot because it's giving back most of what it put on. As we speak, it's down 3.5%. And big boy Reliance Industries as well has slipped a little bit. And given its weightage, that's what's putting some pressure.
Just looking at one of the smaller stocks, Nigel, even as the mid-cap index is at the low point of trade, we have CE Infosystems, MapMy India. That's taken a big knock. It's down 40% from the top, but suddenly it's spiked up right now. CE Infosystems comes up for you. Volume's picking up. The stock is up nearly 5% from the lows, sitting at the high point of trade. And it's been a bit of a vertical move that we've seen in just the last few minutes, so keep an eye out on that one. The other one, which is surging just as we speak, IGL and, JB Chemical and Pharma, now known as JB Pharma. So just pull up those couple of stocks. So all perhaps, we are seeing some stocks seeing some purchase from lower levels.
Since we spoke about the mapping space, Manglam, I don't know whether there is some news on that space because MapMy India has moved up. Genesis, another smaller player in that particular vertical, which has been a big underperformer. That as well is up close to around 6-7% or thereabouts. In a weak market, that's why we're just putting some of these stocks up for our viewers on the screen. Genesis currently up 7% as we speak. Mitesh Thakkar is back with us. Mitesh, help us out with your trades.
Running our BTSP on Supreme Industries, I would recommend the BT. Some levels from just give me a minute, yeah.
Sorry, you have a buy on Supreme Industries or a short on Supreme Industries?
SCB.
It's
the chart isn't loading, some problem. Just give me a second.
Yes.
Okay, I got it now. So STBT over here. With a stop at about 3,600 for targets around 3,500, and Reliance is the other one. That's looking weak as well. So Reliance is a STBT with a stop at about 1,215 for targets of 1,190.
Got it. Okay, all right, Mitesh. Thanks a lot for giving us both those two calls, Reliance and Supreme Industries. But it's around 3 p.m. and Nimesh joins us to help us out with what he's picking up on D Street Chatter. Nimesh.
Hi Nigel, in a quiet and range-bound day of trade, not much happening after the first 30 minutes of trade. The index which is under pressure is clearly the metal names. So all metal stocks are under pressure and a bit of selling as well. But from a flow perspective, the sense I'm getting is even now there is selling from the larger FIs. So the selling intensity seems to be continuing from the larger FIs even in today's market. I guess because of the holiday tomorrow and the expiry on Thursday, you might see a bit of a short squeeze. And given the kind of PCL levels we are, and the net long short data, you might say a bit of a short-coming rally. But for the next series, the general feedback is maybe, in the first half, you might say a bit of a relief rally because there is a general sense that given the way the gold is cooling off, crude is under control, you might see a bit of a risk on in the equities given the kind of sell-off we've seen in this particular series. So net, today there is the selling continues, but for the new series post-expiry, there is a feedback that maybe you'll see a bit of a pullback rally. It is in the first half of the new series.
Oh, that's the hope. Hopefully that takes place, Nimesh. Yeah. Portfolios have got absolutely slammed. What about individual stocks? What are you picking up?
Well, so in terms of individual names, the first stock is PB Fintech. Well, the stock is under pressure. I understand there is a small MOC buy flow at a leading FI desk in PB Fintech. Remember, even that stock is corrected nearly 30-40% from the recent peak. So that's the first name. The second stock is Adani Power. Within the Adani Group stocks, this is the only stock which has rallied pretty hard today. I understand some HNIs are quite active buyers as well. So flows are positive at HNI desk and a bit of reaction on Adani Power after the recent underperformance. So that's the second name. The third stock, both the large cap names Wipro and Kotak Mahindra Bank. Wipro stands out because the entire IT basket is under pressure, but Wipro, I understand there are block bids, which means there is an interest to buy Wipro at these levels. And also Kotak Mahindra Bank, after some mixed flows, some bit of buying has resumed in Kotak Mahindra Bank as well. So these two stand out in terms of flows. And the last one is SPML Infra. Again, a small stock, but the sense is, there is a strong buzz that the company is likely to bag an order very soon. So that's something to track in SPML Infra.
All right, Himesh. So those are some interesting stocks, some unheard of earlier as well, but an interesting bunch that you got in an otherwise, narrow, straight-jacketed market, so to say. But in that, we have M&M, which is surging for the second straight session. There were a bunch of brokerage notes that you had highlighted yesterday.
Yes, Manglam. So it looks like after the sharp correction that we saw in the last 10 days, you have seen a bit of a reaction on the upside as well. Largely because, while the street was very much worried about two main reasons. One, the Tesla entry, and a lot of analysts were expecting higher, EV bookings than what they reported of 30,000 units. So these were the two big concerns. But a lot of brokerages wrote on M&M yesterday, and everybody seems to be highlighting on a couple of large things. One, that the Tesla entry could not be that severe on Indian companies, and including M&M as well. So that's one thing. So most of the brokerages have a buy rating and a target price ranging between 3,800 to 4,000. Jefferies is highest at some 4,074, 75. But clearly from what the brokerage notes are, one, they believe that the correction was overdone, and Goldman wrote a very interesting point that in the last many years there has been 5 instances when the stock has corrected more than 15%, and after that, over a 12-month and a 24-month period, it has given 23 to 30% return. So again, this has been the instance where the stock has corrected 15%. So as I said, most of the brokerages are positive. They are not too worried about the Tesla entry, and at valuations, what is quoting on core businesses, a lot of brokerages are bullish on M&M after the recent correction.
All right, Nimesh, thank you very much for that. So that is M&M for you, and actually that's the reason why I think the auto index is one of the few sectors which is up in the green. It's up about 0.5, 0.6 odd percent or so. Should we play out a quick soundbite? Okay, I think we have Jay Bala with us now of Cash the Chaos, so we'll sort of bring him in for a quick view and then get you that Federal Bank soundbite that I was referring to. Jay, good to have you with us here. Thank you for your time. So that bounce is no bounce. It's just been one way. And that's surprising, isn't it? Market oversold, but remaining oversold. What's the sense now, near term, from here?
Yeah, that's right, Prashant. It's quite tricky. The market came to time and price support, and market didn't respond higher. It was only the mid-cap and the small caps which saw a reasonable amount of bounce. But the large caps haven't responded to a significant support. But where the market is and the next significant support, there's quite a bit of gap, and the markets are just flattening right here, doing nothing much significant. But the problem is, this kind of positioning could lead to some level of distress selling. So I suspect the market could go to the support rather than bounce from here, because the significant support was 22,725, and market is considerably below that. The next support is 22,100 for the Nifty, and then followed by 21,800. See, the problem is also coming up from the global markets. If you look at the cryptocurrency market, Ethereum has got smashed today by 10%, and Bitcoin has clocked a double top. So the overall picture is saying that there is considerable amount of risk of coming from the global equities too. So watch out for what the market does in the next couple of days.
Jay, the good news from a bullish perspective is Jay has been giving this sell call for a long time. We saw 25,000, 24,000, 23,000. Now it appears that we are at the lower end of the range, or we are headed, or at least 21,800 to around, I think 22,100 is what you're talking about. So the odds are that that's the near-term base, that is around 2.5% away from here, and then we bounce. Will you start getting constructive at that level?
That's right, Nigel. That's on October 1st, I had 3 options in front of me. 2 of them was bullish, and this is one of the bullish case where the markets comes to these support levels and starts an attempt at the all-time high. But we need to see what the markets does around those levels projected near the June 4th lows. We want to see a positive response from the market. Only then we'll consider. But at the moment, the consideration is that the market is expected to bounce from there. The selling could be, once if it gets to those support levels of 21,800 to 21,200, I think the selling could be done. That's the medium-term picture. But there are alternate pictures. So I don't think we need to go into that. But
is there a level? Is there a level before you will make that action of buy in the market? Because you're talking about the market making a move once again towards that all-time high. Are there any particular levels that one should keep in mind?
See, basically, it's the structure that matters, Mangalam. See, basically, we want the markets to respond to support levels. Usually, markets base formation is a process. So we'll have a considerable amount of time to react. We want the dust to settle down and show early indications that the markets are reversing. So we don't have levels at the moment, but we are anticipating that levels around the June 4th low, closing basis or intraday low basis to provide a solid support for the market.
All right, Jay, request you to stay with us for the time being. We'll slip into a short break. More market talk on the other side.
Gross NPA of the lenders increased by more than 32% in H2 FY24 versus H1 FY24. This compares to a decline of 32.5% in H2 FY23 when compared to H1 FY23. We had highlighted in May of 2024 that rural market has come under stress. Q1 FY25 showed further deterioration in their asset quality. So from May of 2024 to now, most of the lenders have given negative returns versus positive return that you are seeing on Nifty.
But on to our series of year-enders, and we are putting the spotlight today on the microfinance sector, and it witnessed pain in this year, and that is expected to continue in 2025 as well.
Keep an eye on a couple of stocks as we speak. We're 5 minutes away from close. Sun TV has moved higher. Remember, this is a stock which will exit F&O the entire F&O trade set up from the start of the next series. We also have Chambal Fertilizers, which is moving higher. Chambal Fertilizers moved to the high point of trade. At noon, you know, the open interest on the stock was close to around 81% of the market-wide position limits. And it so appears that if it's fallen below that 80% mark, it may get out of F&O ban. That explains why we're seeing the kind of move that we're seeing on that stock. Though domestic defensives doing a lot better in today's trading session. We saw that in names like Nestle, Colgate, HUL as well had moved off lows itself. Jay Bala still with us. Jay, you spoke about the frontline index and you spoke about how the market could perhaps be in a bottom formation process. But typically ahead of the market, we have a bunch of stocks which form bottoms and move higher as well. Are you finding any on your radar right now? Is there something that one can buy?
See, the market's a bit diverse, Mangalam. For example, if you look at something like a SRF, it's given a multi-year breakout and it's pulling back. So there are select pockets, but as such, a sector as such, I don't see anything that's moving as a whole. M&M was one of the strongest within the auto space, and that's actually clocked what we know as a 5-step down from its all-time high on the daily time frame. So, in autos, capital goods, FMCG, and PC were the leaders in the markets, but all those are actually in a very strong downtrend. And there is trouble brewing in the form of HDFC Bank. If HDFC Bank were to close below 1620, that will complete a head and shoulders top, and that can be a drag on the overall market because it's got 30% on the banking index. And the banking index itself has on nearly 30% on the Nifty. Things are going to change by the new SEBI rule, but as things stand now, that's what the market is. But so as to your short answer to your question, I don't find a sector as such, but there are pockets which can be hunted in a very, very careful fashion.
So you spoke about SRF as one of the stocks. You spoke about M&M as a stock, both of them doing well as well. On the downside, you were worried about HDFC Bank, and you are expecting Nifty to do well from here on once it forms a bottom. What do you think would lead it? What are other specific stocks?
Yeah, we need Reliance to complete a price structure. One more lower low below 1196. I don't know how far down. I have an objective of about 1084. If that were to get completed, that will also lend support to the market. And I need to caution your investors. There is a considerable amount of downsides up to 21,800. So basically, and there's no need to. Although the anticipation is for a bottom to form, we want the market to endorse that opinion, and we need some sort of reversal signature from the market itself before we can think of markets reversing. Because right now, as the markets are poised, it is looking like the US markets will actually turn down. If that were to happen, we need to evaluate if that is bringing more money to the Indian markets, or is the Indian markets also starting to see more selling. That's the point we are trying to make here.
All right, Jay, and also the last time you joined us, besides the headline index, you're saying you're not ruling out maybe a 10% run on the small cap index as well. That's still on?
Yeah, that's still on, Nigel. But it could start at a slightly lower level if February 18th low on the small cap index is taken out. As things stands, I don't anticipate that to get taken out. But if it were to get taken out, the rally would still be on. But it would be just slightly short of 17,000. But we could still see 8 to 10% bounce for the small cap index, but from a slightly lower level.
Okay, all right. Jay, request you to stay with us. We'll want to know a couple of stocks more of yours on the markets forward. For the time being, let's take stock of the markets today. Well, we ended virtually at the low point of the day. So in the middle of trade, we had the Nifty that actually was up close to around 50 points, but it goes home with a cut of closure around 30 points. Stocks that didn't do well from the headline index, you had Dr. Reddy's, Hindalco, Trent. Trent continues to reel under pressure, now below 5,000 rupees per stock. You had Sun Pharma as well, that was under pressure. What did well? Bharti Airtel. Yesterday it was a little under the weather because of that money that they're going to be putting in their African subsidiary. Today it bounced back up, so it made up whatever it lost, up close to 2%. Mahindra & Mahindra has been the stock of the week after losing 14% in the previous 10 trading sessions. That bounced back in style. From the broader markets, yes, they were under pressure, but just to name a few stocks that did well.